All right, everybody, welcome to first monthly recap video for this channel at least. This is recap for July of 2021. Another profitable month. Ended up $100 on the green side, but took a few pretty nasty red days that just unfortunate. And of course, this last day, the 30th here, a little bad taste in the mouth to end the month on, but I won't deny a green week or a green month anytime. So great learning lessons all the way through. I'm going to use this video and these recaps more as just an emotional debrief or perspective side of it compared to like the technical breakdown of the individual trades themselves, or more of just like a broader look at everything that was going on this month, because I feel like cover each individual trade and the technical side of it pretty well in those daily recaps. But yeah, continuing to hammer hard the short setups for the morning dump pattern that I like to call them. I traded it 18 times in total for this month on 15 different tickers, and I'll go into the breakdowns of kind of how I can expand on those or better those more in the next upcoming months, or maybe have to take a little step back if we start to heat up some more coming out of these summer months. Of course, this is July. And I would really consider this, we're just under a year now, a few months shy of a year of my trading career. I think I really started hitting the pavement hard in last year of August and September. September for sure, that's when I really started to track data and take this seriously, if you want to call it that. So I'm still kind of amazed at the progress that I made at this point and excited for the future to come. And yeah, let's get right into it. So here's a breakdown for the month for each day. I can freeze frame it there. 51 trades, which is, I look at that and that's kind of a lot of trades compared to, I think March is the only time I traded more as of now. March I had 75, so that's more than I've traded any other month at this point. You can see where we're at so far on the year for these specific stats. All these different little indicators that I like to keep. Report card that I take after every day for each specific trade. So you can see, we were pretty on the low side for execution. We averaged a couple C average days for each trading, which I do not want to promote. I don't want to keep. And again, that last Friday, that was just a bad taste in the mouth for what happened that day on the TAOP setup. But overall, pretty decent. We did great on hammering the A+ setups and choosing which ones to stay out of, when to wake up, when to stay out of the market, when to be fully invested. And I think that's just going to continue to grow and grow with more experience, and especially with more opportunity as we're coming out of the summer months. So now to the specific trades. Of course, this is where we ended up in total stats for the month. Had to take off. I actually traded BTBT. I had to add that one after I did the daily recap yesterday. I thought that wasn't going to break out pretty well. But then I got screwed out for a little $8 loss. So we were at like 98 something, but now we're at 88, but we'll take it. So 45% win rate on 51 trades, and keeping the wins double the size of the average losses on the percentages here, which is everything that I want to be pushing towards. And it's obvious that the longs that I'm taking are still so speculative at this point, and I'm not hammering those with huge size at all. I don't think I've taken any of those over $500 position sizes this month or any month recently. Don't look at meds. Don't deny what I just said. But no, and recently too, but we've been growing, and I think we've been seeing a few more opportunities, and I'll pull up a few charts of some lower float spikers that are starting to put in some awesome high percentage moves that I think we can definitely start to size up on, in addition to the shorts and the morning dump setups that we've been hammering for the past few months now, continuing to fine-tune that strategy. So it's all been good. So scrolling through, I think I scrolled through these slow enough. If you want to pause through all of these or identify those, now we can go through the different data points that I also like to keep on those. We can squeeze through all of here. So just I like to keep more data than I can process, just to err on the side of more data of every single pattern. And every single strategy that's going into looking at this whole thing as a business. That's why I'm doing these videos in the first place, of forcing myself to be in it, be invested in it more, just the whole process, and not just going with the flow, going with the emotions of, well, it's whatever. No, just spending more time in the debrief of each trade, spending more time in understanding, hey, I did this right, but can I do it better? Hey, I did this wrong. How can I learn from it for the next time? So I think doing these videos, doing this data collection is only going to continue to make me better at whatever rate that happens to be. I think it's just always going to add to the learning process and continuing to hammer the nitty gritty, which is so vital in this field especially. So some things I wanted to cover specifically about, starting off with the morning dump setup. Of course, here's SPY over the last month, coming back from some nasty dips. Pretty insane market, and it's going to be crazy to see if we ever actually get a hard pullback or a hard correction on this market, and I will certainly take that into account for the future. If there is a future on this SPY or on this country, of if this inflation is stable for 5 years, 10 years, whatever that may be, pretty crazy times we're living in. So starting off with the goal for this month, I think you saw it on the top of that sheet. I came off of June having just totally whiffed on some great opportunities with my small position sizes. So for this month, I said, okay, my goal for this month is I need to have appropriate position size for the specific trade. And I was specifically tailoring that to my morning dump setups. So saying, okay, I've got the data, I've got the patterns on all these. I need to be taking, over $1,000 position size at least on minimum on all of these types of trades. So that's what I started to do. I started off the very first trade not doing that on AYRO, but that trade was just totally A++ for coming off of the June month and starting off the month on an awesome foot. I kind of botched it. I only got a 6% move on it playing it. I think I sold before market open, but this should have been a $200 winner easy, and that was the first fail on my trading goal on that one, but I quickly learned from there, okay, here's the pattern, here's the data, take the emotion out of it. We've got to start hammering these. When the iron's hot, you got to strike. So starting off, on these, we'll hammer into this morning dump setup. Let me go back to this data quick for the morning dump specifically. So there was 15 tickers in total that I played. 3 of these obviously came from replaying the same ticker within the same day. But just a little over half of a win rate on this one. I was hovering around like 70% for a while, and then I got those few of those that I had to get double dipped on, where I got stopped out, or I either just botched the entry or was a little bit too aggressive, and then I had to replay it again, or I just took it for a loss when it should have been a winner. And I'll talk a little bit more about that too, of how I can adjust this strategy in the upcoming months, or how I can pull it back a little bit to just maybe wait on the sidelines or even play these as a long if we start heating up more explosively. But I don't look at this win rate percentage, especially how far it's come down, as a negative. I think it's, even when I do take a loss on these, I never look at it as the dollar loss, as just what, I never compare the trade itself to the P&L in a sense, if that makes sense. All I can see is, okay, where was the profit opportunity? Where did I screw up? How could I have handled this better in the future? And it just comes down to, this is kind of a video game. And in reality, it's all just made up numbers and flashing lights, and the ability to take the emotion out of the trade and just stick to the hard data, stick to the parameters that you're seeing, and stick to the charts that I've been collecting over and over and over again, and how I feel these trades can be played is what's going to be most profitable, and how to best take a share of this market away from the rest of the field. which is what I'm looking to do. I'm just looking to take a little bit of slice and then just back away. Say, hey, I don't want to. I'm not here for the long run. I'm here for a good time, not a long time, right? So, breaking down each of these trades, traded Thursday the most, which I was surprised to see. I would have said I traded it Tuesday the most, which I think over the whole time I've been trading this pattern, I think I've played it the most on Tuesdays, but obviously I played it the second least for this month on Tuesdays. Also didn't really know at the start of this month what I was really trading, and now in the sense of the time frame, because now as I realized in the middle of the month when I was still waking up at the 7 a.m. time frame looking to hammer any news release or any press pump, I started to, I don't know how I realized it one day, but I eventually was like, oh, it's the 8 a.m. news pump, or it's the 8:30 news pump. And over, I'm gonna count them here. 2, 3, 4, 5. 12 of the 15 tickers were 8 a.m. or later, and all those were 8 or 8:30 or 8:15. I have a few on here. 2 of them, 3 of them I can see, but we're within half an hour of that 5 or 8 a.m. news pump. So either 7:30, 7:45, or you know what I mean. So it was just like I was waking up so early for no reason, and I didn't really know that. I think I carried the perspective coming in of, okay, I'm waking up early to just be ready at the beck and call of whenever these want to pump or whenever any news release comes up. But then I realized, oh, I'm stupid. The majority of these are pumping at 8 a.m. That's when the news releases come out. And that's really when I need to be ready and focused, not just kind of sitting whenever, just waiting randomly for something to pop up, which I was totally oblivious to. But now I'm aware of it now. So that was interesting to see. And I think, going into the next few months, I am not waking up that early. I'm just going to wake up a few minutes before that 8 a.m. time frame and just be ready to go and prepared to see the patterns as they pop up and just be ready to hammer them as they come down. I can save myself so much sleep. I think I was just ruining myself as well, too, thinking I was putting in the hard work and grinding and getting up early and just like tearing my eyeballs out looking at the screen saying, oh, I'm putting in the screen time. That's what everybody and all the millionaire traders say you need, but it's more about what is the point of it if you're just so lacking of sleep and out of your mind for that screen time if you're not even aware of it, if that makes sense. It needs to be conscious and focused. That conscious and focused screen time is so much more valuable than having 2 times that amount of screen time, but just like totally zoned out and on lack of sleep. That's just, the correlation there just doesn't make sense. So I think I'm gonna, as of going forward for this morning dump trade, I'm going to take in that extra hour of sleep, be well prepared more for the majority of the plays that end up happening around that 8 a.m. time frame or 8:30 time frame to hammer them to the short side. So then you can see, Tuesdays I normally trade them. I felt like I normally trade them the most, and you can see the P&L percentage obviously reflected that. How I think they worked out the best on Tuesdays, even though there may have been a few more opportunities, or I think I may have, maybe I probably double dipped on a few of these plays, and that's why it's considered more on this Thursday, because you can see the P&L, how that's changed on there too. So that's maybe what that's factoring in at that point. But ended up profitable, $130 on this specific setup for the month as well, which is good to see. That was more than my entire month in total. I got screwed out of some other patterns. So this has been my most profitable pattern. It's what I'm going to continue to start to hit in the next few months coming up as well. Okay, so now let's get into some charts specifically of how I want to attack these coming up, and coming up with the fact too that through every single one of my losses that I took on this short pattern in the morning in the pre-market, 100% of the tickers ended up closing the day lower than what my initial entry was. And so in essence, all of them faded off and died within the same day, intraday. So, the degenerate part of me says, okay, just trade that data. You got to trade that part. But then the smart trader in me and every single other smart trader would say you can't put yourself in crazy risk levels like that, and that isn't smart trading, especially coming from starting in the 2020 market. I can totally realize, yeah, that is a pretty stupid thesis to say, oh, you just short it at any point if it just starts going parabolic in the pre-market, and then just sell at closer to the end of the day, because they're all going to fade. They're all terrible stocks, which is truth. But the famous quote is, the market can stay irrational longer than you can stay solid. And I'm not going to try and waste more brain capital in holding on to that truth, the logic, which is that all of these companies are terrible, but the price action doesn't want to reflect that, because the price action is king. The price is king over when my margin gets called and when my account blows up, because I'm still holding on to logic and the data of what my pattern says. But it's, at some point I got to play the data. If it's just smacking me in the face continually and I'm getting continually played by the emotional side, I've got to do something to break out of that emotional training and stick to the data. So some examples of that I was hitting hard are JZXN, specifically on the 14th here. So this one I had to take for a loss, one of my bigger losses, initially getting squeezed out of this. Maybe could call this a little bit too aggressive, but 2 red candles after coming off of another short squeeze high day spike. I wouldn't call that first entry too aggressive, but having to take the loss and cover at what my risk level was of high a day. Playing this one again for what was my biggest second win. These are the ones where I just start to question, should I really be cutting the first entry? Should I really define these trade parameters as high of day when every single one of them, 100% of them, end up doing this type of pattern and dying and continue? This was well beyond even 10% from that first entry at the end of the closing trading day. The smart trader in me says 100% no, don't do that. You need to stick to your trade. This was still the biggest trade, or the biggest loss that I've had, even from cutting here to here. So trying to think that even if I was setting my risk level just well beyond that, something crazy like $9, just absolutely ludicrous risk level, to think that, if it touches there, then the trade's definitely over, and then it goes to like $9.10 and then continues to like fade off and comes back down to $5, then I'll be like, oh, stupid, I should have set it at 10, right? Just get more and more degenerate with it, kind of looping Kaizen crazy mentality with it. But these are terrible companies and they're just gonna fade. And maybe this truly is summer months, and this is only happens specifically because there's not a lot of other crazy short sellers like me willing to take on some crazy risk level like $9, and then they get super, super, super squeezed and then margin called, and these things go insanely parabolic. But for what's been shown, this is the pattern, this is the chart. And it's just hard within me, especially too, to try and justify, okay, do I really say to myself that high of day isn't the risk level anymore? Or do I just stick to this mentality and take the trades as they're there? It's a continual process and continual refinement, with trying to grind closer and closer to perfection with each new trade. But I think growing in experience and then adding in the individual perspective too of, okay, it's about understanding what the stock specifically is telling you. This chart is great, but again, I love that quote, and forget which book that was from. The chart isn't the market. The chart is a representation of the market. And if price is continuing to go crazy and squeeze, then I can't be short. That just doesn't make sense. If it's continuing to dump and there's exhaustion and there's a lot of overhead coming in to try and liquidate into this thing, then I need to be short, and that's the time to be short. So that's really the focus of the strategy. And at the end of the day, everything needs to be focused in that. And I can't continue to chop myself away and say, oh, well, the price, on a specific one of like SPI on, this day of the 14th. that we're getting to these levels and it's putting in the pattern. Okay, the trend is now to the downside, but we're just holding, and now price is continuing to spike. Always coming back to the end of the day, looking at this chart and saying, oh, well, there's more opportunity on the downside. I should have just held the whole time, and I could just take my 10% profit and run, and I didn't have to do anything. I could just walk away and literally come back and push the button again. I don't even know. I don't even know what to say. I don't even really know how to feel, because take this same chart, put it in a 2020 market, and this thing's at $20, right? Or take this same chart, maybe advance us a few more months into the future, into the winter fall trading months. Maybe this thing's at $10. But I never want to say anything, and that's the problem with me too, is I never want to say anything is 100% set in stone perfect of, okay, this is the trading pattern, I just need to hold these, or doing this, or maybe I just need to say, okay, this is the specific data for the summer months, and now as we're coming out of them, maybe I need to adjust that and say, okay, I can't do that specifically in the next upcoming months, but next year, this time, I can do this exact same thing and continue to hammer this way. I just don't really know. I'm still, like I said, I'm under a year of experience, still growing, still learning, but this is what I'm seeing. You can't deny that this is what we're seeing in essence. So, God, yeah. I'll just go over a few more of these morning dumps that I wanted to outline as well too. Meds from the 21st. So this one was at one I took double. Initially for a loss, got stopped out, I think stupidly, and then took it for a pretty nice ride to the downside, but also got shortchanged thinking I was covering smartly, but at the end of the day, it continued to just fade and die off once again. So these are ones that I just say, stick with your guns, and the smart trader in me also says too, the pattern that I've now identified is, okay, we're taking off half of the position at 10% just to lock it in and not have to play any more of these games with all this mishigas in the morning, and they can just take off those profits in the afternoon day. Because in reality too, when looking at it, had I not taken off the half of my position at 10%, and really, if I just went totally degenerate, held a full position size till the end of the day, man, I think we'd be beyond 1K month at a minimum. At a minimum, maybe 2K for just being so degenerate. Maybe I took a loss. Well, I wouldn't have taken a loss. 100% of these ended up closing the trading day lower than their open price. 100% of the tickers that I traded. And it's not even including the ones that I missed, especially the TAOP from that one awesome day last Wednesday. It's just tough. And that's just what the stock market totally is. It's just getting to the point of frustration of, oh, I just need to be doing this. And then, maybe I come in the next few months doing that type of strategy, and it's the exact opposite. And these things are continuing to spike and squeeze like crazy. I don't know. I'm throwing out words and saying the same thing over and over again, maybe to try and convince myself differently. But that's what I got to see, and that's what I got to adjust to. And that's what I'm going to go with in the next few months of, hey, I'm seeing these patterns here. Maybe if we're getting to like a COCP more recently on the 29th, actually, we need. So these types of charts where there really isn't a huge die-off immediately, because I'm looking for total trend change of sell-off, hard sell-off from that peak to 10% easy, and then looking for 20-30% off of that. Not this type of, oh, okay, we bounced a little bit, sold off, but we're trading around here, but we're still kind of weak, and then just flirting around. These aren't the A+ setups, but still there's profit opportunity to be taken from these. Ability to cover a large position and just say, okay, this isn't an A+ setup, but I'm still confident that it's gonna die because it's a terrible company. And so that's the type of mentality I can take into some of these too, to say, okay, this level 2, this time in sales, this low float isn't appealing to me or isn't fitting all my criteria and why I want to be on it. I'm still profitable. I'm covering all my commissions and fees for being in the trade in the first place. I'm just going to take off like 3/4 of it, even if that's a 2% win at the moment, and then just say, okay, I'm still short 100 shares, $100 worth of the stock, knowing that it's going to die off, but I don't have to deal with any of the high day breaks, the emotional VWAP uptrends here, any of it. I can just come back at the end of the day and goes, oh, sweet, I'm in the money, another $50 win. Maybe that's the point at which I can start taking the ones where it gets a little edgy or just a little bit over the line. That may be the more profitable opportunity or the more mental time saving capital to look at. With these ones that just aren't continuing or just dying off immediately when I want them to, like TAOP, which was a perfect play that I completely missed once again. Still kind of angry by it because this is the trade that we're looking for, and we can continue to, even through all of this retest and VWAP stupidity, there's still, it comes down to 3-2. It is right there. That's what I'm looking for. That's what I feel most fits my personality as a trader, are these types of charts where it just completely dies off. You're so far on the money. You're just like, okay, when do I want to decide to take my money out? That's the problems I want to be having for these types of charts. And when it's not an A+, even though I may be, if I do get immediately squeezed out and I pick the wrong entry, I'm always just gonna cut it for whatever loss that is. I think I got a little bit screwed on that with CUEN the other day. That was on the 22nd. So this was also in combination with WISA shorts that ended up going south, and my $500 loss day. If I pick the wrong entry, I'm a little bit too aggressive, and I got an entry here, and I had to get stopped out at the high day break on this one. Okay, yes, whatever. It could continue to keep going, start squeezing like crazy, especially in the pre-market. But if I've got day trades left, you better bet that 100% of the time I'm going to get back in and just wait for the profit opportunity. And just wait till I'm in the money, because it's 100% of the trades I took this month ended up being that way. And I'm being stupid. I think I'm being smart in, cutting losses quickly or just taking the money when I can, not when I have to. But at the end scheme of things, that is stupid if I'm just continually getting played out. And I think that's how I have to look at it. So those are the few morning dumps that I wanted to go over. For the long side, I think, I talked about in the beginning of the month, I still was just farting around. I feel like how I have been through this whole trading career of, I think this is a dip and rip setup, or I think this is a VWAP hole type of setup, and just put whatever dollar amount I think into it. And most of the time, I end up getting stopped out. I feel like, if I had to guess, it'd be like a 20% win rate on those types of longs. But we've been getting, as I've been waking up earlier, kind of as a side effect of that, I started looking at some of the pre-market squeezers and the low floats a little bit more. And we've got some opportunities that I capitalized on pretty well. SJRP was not one of them, but I just wanted to go over this chart. Some other ones like XBIO just comes to mind, Zila, XELA. Please go to the 26th. And just basically, if it's a low floater and it's squeezing like SJRP, buy it. And I think especially as we're coming out of slower trading months, slower trading season, these are just going to continue to ramp more and more. And I feel totally confident now, as I've taken my toe in the water a little bit more with these, to just take a bigger position size. Take closer to $1,000 position size on all of these and start playing these for the actual 10% or beyond profit moves, because I think it can totally either overtake the short strategy that I'm still considering my main focus for the moment, but as we're coming out of slower months, And I totally think that these things can produce well beyond anything that I was looking for from the downside on those patterns versus what the upside potential on these can be as well too. So SJRP was a great one. XBIO I want to talk about from the 23rd. That was an awesome dip and rip. Was it this day? Yeah. So this day here. Awesome. Holding up well. I believe it had news on that day of they had the 26th here they had, or no, I believe that was, whatever. Holding well at that point, still squeezing, former runner. Jeez, the profit opportunity in the morning especially too. That's just everything. You can be out of this sitting on an awesome cushion even before lunchtime. That's totally my trading personality, everything I'm looking for. Awesome on that one. And then AEHR was another one that I highlighted in my trade, specifically too on the 19th. So I think it was this day. Just squeezing, holding well in the morning. I looked at this one originally and I was like, why didn't I get short this one? This could have been a morning dump opportunity, but it was holding well from the previous few days. So that's why I didn't get short at all. But this one was just kind of holding, sticking around, and didn't want to die off. And something I think Bryce Tui said it best too, that or just reminded of the fact that if something doesn't do the bearish signal, then it automatically becomes a bullish signal. And this was kind of a great case in that of as it's dying off or looking weak, just under VWAP, it's still holding these levels here. And then all of a sudden, as we get into the afternoon trading hours, it's putting in higher lows, coming back above VWAP, testing these high a day ranges on the day, and then just big squeezes. And the opportunity was still there throughout the whole day. You still had plenty of time to get in for later moves in the after hours, especially. These things can go absolutely berserk. So yeah, I think that's all I'm going to talk about specifically for shorts and long sides at this point. I'm excited about both of them. I think I've made great progress on both of those ends. And I think shorting, especially too, as I look at bringing more shorting into market hours or even beyond just the specific pattern that I look to short right now and looking to short first red day or technical patterns like a double top or all these different types of things. I think that's just going to only vamp up my total perspective on the long side as well too. I remember watching a Kyle Williams video as he was talking about an OTC ticker on its first green day, and now he was looking to get short at this point. And it was funny because that whole morning I was totally long the entire time and had zero awareness that, oh my gosh, there could be some shorts piling into this, and if this thing hit a specific level, it could have just totally dumped off and it would have been a short palooza. I just totally spaced on that. And I think being able to expand my horizons and look at both the short side and the long side is going to be so beneficial for the future in just every aspect of trading. And I think it's very vital for everybody to have that type of experience as they're going around with this one, to be able to see both sides of it. Because that great Chris Cady quote of, the example of a pen. If I show you this ballpoint pen, you would say, this is a pen, this is used for writing. And if you showed me this pen, then I would say, oh, this is a ballpoint pen, this is used for writing. But if you show it to a dog, the dog would say, oh, this is a chew toy. Well, who's correct? Right? Everybody is correct at this point. It's the same thing like the stock market. Two people can see, oh, this chart here is a dip and rip. This is totally going to the upside. You can look at whatever chart I mentioned previously and say, oh, the opportunity was there. Or you can even look at my morning dump setups and say, oh, geez, the short side on that, exactly how I'm looking at it now, saying, man, I just got to play for that afternoon fade because these are all terrible companies and you just got to watch for that dump and you are golden. Versus somebody who can say, no, look at the long side opportunity. You could totally be playing the breakout. You could totally be playing the morning volatility. There's so much opportunity there. Well, both of those ideas are correct, right? And you can't deny both sides of the argument just because you're seeing something that you feel is 100% there, because the other person could be totally right. And that's just the beauty of the complexity of this stock market and day trading as well too, that there is so much opportunity on both sides of the spectrum. And it's not even just, it is you either are losing money or you're either making money, right? You're either going up or you're going down. But there is so much more of that too. And, besides all the derivatives markets and whatever you want to talk about that way too. But that's the beauty of this whole thing, is just the complexity and diversity and total opportunity of the stock market. And I'm in love with it. And I'm continuing to find myself saying, hey, I really like this short strategy in the morning, or especially too, I really like these crazy low float longs in the mornings too, that I can just make my money quick and then be done for the rest of the day. But it's, if there's other patterns out there, then if other people are making huge amounts of money in percentages and they're seeing just something totally different than what I'm seeing, then I totally want to expose myself to that, right? It's just like being so well-rounded and diverse culturally as a person. Going out to visit other nations, other countries is going to make you so much more aware and, I don't want to get too philosophical of how diverse you are in your mindset or accepting of your mindset, whatever, but the perspective that you can have of, oh, wow, there's people who think differently than me. I think that's an incredibly powerful statement to say that, okay, my viewpoint's not the only viewpoint on this market or what I do with my life, especially too. And I think refining that mindset in me is going to be a key step to continuing development as a trader for me. So going into next month for August, new month goal for me is going to be have fun. I specifically wrote it as have fun, ! Like you can see it on here. And I don't want it to be construed as, oh, have fun, like we're going to the slot machines in Vegas and we're going to push all the buttons and flashing lights and yay, which is kind of what it can seem like at times when you're just making so much money, you're in a great win streak. But I look at this more from the perspective of coming from the sports background too. When I came out of the game of baseball, I looked back at every single game I played or every time I came to the field, and I was, I just questioned, why was I ever nervous? Why was I ever thinking that on that day? I can remember specific days of, oh, this person's showing up at my game, or, oh, we're playing these guys today, blah, blah, blah. It's just, and I look back at it now and go, it didn't matter. It's just so stupid. And it's here today and gone tomorrow. And that's how I kind of feel like I've been approaching trading lately is I've gotten a little bit of, on the side of, oh, well, I'm in the negative right now, and this is going to be a bad down day. I'm going to lose money, and people are going to judge me, right? Well, nobody's judging me. And even if they did, I don't care. And that's just what my focus is going to be for this month too, is carrying that same philosophy as, like the kids in Brazil who are just playing soccer in the streets barefoot with a soda can, right? They don't have an actual soccer ball, but they're literally just having so much fun and approaching trading as one of those little kids who's literally has, maybe they have an idea of what the repercussions are, or what the consequences of actions are, but that's a little bit too far on the point. But coming at this market of, if I'm having stress while I'm in a trade, how do I expect to size up in the future? That was my biggest hit with it. If I'm stressed about taking a $200 loss, how do I expect to take a $2,000 loss in the future, a $20,000 loss in the future with these growing position sizes and the growing account sizes? It's just going to be impossible. And how do I expect myself to perform at my best and think so clearly when I'm still focusing on that and I'm still, kind of like sheepishly hiding away like a little gerbil in a ball while I'm in a trade? It's totally incorrect. And I have to come back. I have to force myself into the realization that you got to be having fun. And it's got to be curiosity over anxiety. It's just got to be learning lessons every single day. Obviously, I'm not going to say, oh, yeah, I lost $500 for the 6th day in a row, right? I'm having fun. it's not going to be that. It's going to be what I want my goal to, what I want to look like as represented by my goal is no matter if we go up, no matter if we're going down, it is just going to be ego is taken out of the trade 100%. That this is the same as the wind, the same as the sunshine. It's here today and gone tomorrow. All of this money is so fake and meaningless, and especially as I'm not trading crazy position size right now, and I'm still in the learning phase, still under a year of my trading career. If I'm not having fun, then something's wrong. And I mean, I'm living the life. There's people literally digging ditches. There's people cleaning out toilets right now, and I can sit in front of a computer and literally, this is the extent of the work that I do, and especially everybody that we're learning from as well too. They're making millions of dollars in doing that. And how could you ever try to downplay that or get any amount of anger from that just by seeing? And it's funny to think too that, just if somebody was looking at this, like if you couldn't see any of my screens and you were just looking at me from reverse this whole time, how is it possible that my emotions are changing by me literally not moving and all I'm doing is pushing a button? And yet these lights in this screen are somehow having an impact on that. That just totally doesn't make sense in my brain to that. So that's what this goal for the next month is going to be, and I think it's going to produce some awesome results. And obviously still maintaining the initial rule set of everything that I like to push on cutting losses quickly, just maintaining, losing the ego from the trade. Outline is here as well too. Number 1, detach the trade from your ego. Number 2, cut losers when they need to be cut, which I advanced a little bit from Sykes's point of, cut losses quickly. Because like with this short-term strategy, if it's a loss, if I'm ever not in the money, I don't want to be cutting it because the trade could still work out in a sense. So that's just how my brain handles that sentence the best, is cut losers when they need to be cut. Number 3, take the single. And then Tom Sosnoff said it well, of take the money when you can, not when you have to. For trade what's there, not what somebody else told you is or isn't there. I fell into that pretty early in the trading career of, Tim Bowen said it's going to be a dip and rip in this morning. I'm just be looking for the dip and sell into 30% profit, right? But I have to be trading what I see. And especially too, I cut myself off sometimes if somebody else says, or if I see it somewhere else, if somebody's identifying the same thing, then I usually will just not trade it. Even if I identified totally the same thing, I'll just take myself out of that. And if it does exactly that, then I'll say, okay, I did see that too, but I wasn't going to force myself into that situation because I may have biased myself a little bit too if I was in the negative to think, well, this is what I thought, but this is also what that other person thought too, so blah, blah, blah. Or the same thing, if I see something that is there and somebody else says, what the heck are you looking at? Why are you short this? Or why are you long that? Can't you see blah, blah, blah? Don't listen to him, it doesn't matter. Number 5, establish the trade parameters before entering the trade. I'm not here to see a green candle and go, ooh, buy, which is kind of what I did a little bit with the longs, but I was had a little bit more of a thesis into those, especially, and the profit opportunity was definitely there, which ties into number 6 of enter only when there is substance to the trade, which I didn't do yesterday on TAOP, but that's why we are having these rules and having to stick to them. Makes you a better trader. Trade the trade, not the P&L. Great rule. I think this was from Gertani, from Sykes, from everybody. Gertani obviously kind of popularized it, turning off the P&L indicator on his charts and everything. And it's the same thing that I do. I just totally disavow it and I don't look at it whatsoever, and I kind of get screwed out a little bit because then when I do take a bigger loss, then as I turn to look at the P&L, then it just becomes, like hitting you all at once of, oh my gosh, that's a little big. But that's why you establish the trade parameters before entering the trade and you understand what you're risking going in. Number 8, I talked about it, choosing curiosity over anxiety. This is going to tie in beautifully to that having fun goal for the month of August. When you make a mistake, correct it. I think this one was also from The Art of Technical Analysis by Adam Grimes. of, he said it like, when you make a mistake, correct it immediately. And I'm understanding now too that, or I think I've gotten a little bit better of not tying into some of these other ones of establishing trade parameters before entering the trade. It's all about not just seeing green and buying, which I got into the habit of very heavily in the hot market of 2020, because everything, I feel like I was just going to miss it. It was the FOMO, right? Of, oh, this thing's going to be the 1,000% mover today. I need to get in now, and not just saying, not be willing to risk missing it in order to correctly identify the entry and set yourself up not for the trade today, but for the trade tomorrow as well. Number 10, add to winners. These are just more technical. Add to winners only if you would feel comfortable entering there with your first entry. Obviously for me for now. Number 11, don't average down a loser. A little bit I'm going to vary with that on the short setup on the morning dumps, maybe as well too, but I'm not going to, if I'm negative in the money, I will never take off some of my position at that point. My position is my statement of what I believe the trade is going to do. If I'm still in it with a full size, I still believe it has the potential to go down. If I'm in the negative and I'm sizing down, then I'm obviously doing something wrong, because I probably should have taken profits earlier if I was in the money and then it went against me, or I just had a wrong entry entirely and I made a mistake and need to correct it. So, and the last one, learn, grow, and be gracious in every loss and every gain. And that is the whole crux of it. Of there's going to be wins, there's going to be losses. We always want to see more wins than there are losses, obviously, but sometimes it takes the big losses to understand how great the winners are. And just that reformation. I am a great trader. It will happen. I know it with 100% certainty in my heart, as putting your mind and heart and soul into it, and continuing to take on failure and not be afraid of it, not shy away from the opportunity. And I think having fun goal is going to be a great motive of that, and pursuant of saying, okay, failure is going to happen, but through that failure, you're going to need to have fun. You're going to need to understand that failure doesn't define you as a trader, that failure is not the end of the story, even though sometimes for the trading account size it can be. We're not going to let it happen to that point, obviously, but even though there are losses, even though there are terrible entries, terrible exits, terrible mentalities that sometimes happen, at the end of the day, it's always going to be pushing forward, and having fun and continuing to relieve yourself from that stress is what's going to make you a more well-rounded person, a more well-rounded trader, and overall better quality of life, which I think every single person is chasing through this goal of day trading. So that is all I got for this monthly recap. A little bit long-winded. I'll try and keep it more concise, or keep it more defined in the future. Maybe not go over specifically so many charts, but yeah, just wrapping it up of great opportunity. Still, even what's considered a slower month of July, of the summer months, still opportunity as a new learning up-and-comer. And it's just going to be only more exciting as we're growing in experience and growing in more tickers moving across the board, and maybe some hotter months of fall and winter. Excited for August. We will catch you guys on the next one. Thank you guys for watching once again.